Hey guys, Talkaholics, thank you guys for being here today. When is it time to abandon ship? Shipping is a notoriously cyclical business. There are long periods of time in which shipping tends to do, let's say, less than awesome. And then there are very short windows of time in which shipping also tends to do tremendously. I am invested in the oil tanker and dry bulk spaces currently, but I'm not in love with these businesses. Ultimately, I know that there is a time in which I will need to say goodbye to these investments. In this video, I'm going to be talking about three simple indicators that I will be using to let me know when when it is time for me to ultimately sell my shipping investments. Indicator number one, pay attention to the supply growth. Shipping is a simple supply and demand industry. It's kind of like a commodity business. Too much supply, your earnings are going to go down. Not enough supply to meet demand, your earnings are going to go up. Shipping is also very transparent. With a little bit of effort, you guys can go out there and you can look. You can see how many ships are being ordered at any given time. For me, I think one of the red flag kind of areas of supply growth is somewhere in the 30% kind of range. So once you see that the order book is around 30% or more, that's telling you that among some other indicators, it might be time to start getting out. Now, what you also notice though, is that when these order book percentages go up to these very high areas, that is also the time in which these guys are earning a tremendous amount of money, right? So this isn't the only be all indicator if you're trying to, nail the top in any shipping stock. But ultimately what you can tell based on a high order book percent is you can definitely tell when these stocks are starting to get expensive, when there's very likely to be in the near future an oversupply coming. Indicator number two, vessel prices start getting historically expensive. This is a chart of historical VLCC new building prices adjusted for US CPI. Today, I believe VLCCs cost about 120 million, so it might be a little bit higher on this chart. What this chart is really telling you is that your ships are starting to get expensive. So what a lot of these ship owners, these shipping companies tend to do is that they kind of all stampede. They see that there is high earnings, that they're earning a lot of money, that they have a lot of money on their balance sheet. And what they do is they tend to all buy ships at the same time. And what that does is that bids up the price for these new building slots, because these shipyards are also have a limited supply of the amount of ships that they can build, right? So when you see that these prices get very high, that's usually a red flag. That's telling you, just like that last chart, that there is a large amount of supply coming. And it's also telling you that if these companies are out there buying a lot of ships at these high prices, ultimately the price that they're paying for these ships is going to dictate the return that they're getting on those ships. What you really want to be doing if you are a shipping company or if you are a shipping investor, you want to be buying the ships for the cheapest amounts you can possible. Because these rates that are driving these orders over here, they ultimately don't continue forever. Ultimately, they stop. There's a limit to the supply in which it crushes the market, right? So you want to be buying ships when they're cheap. You want to be investing in these shipping companies when their net assets are cheap, and you want to be selling those when those net assets or the prices of those ships are very high. Indicator number three, public attention. In this case, I'm talking briefly about media attention. Shipping is a boring business. The average Joe and Jane, they do not think about shipping almost ever. Usually when something breaks in the shipping industry or the supply chain, that's when you start to get a lot of interest in shipping. And ultimately, when this kind of thing happens, it's usually coincides when there are very high shipping rates. And that tends to go out and cause a lot of the public to get involved in shipping investing when they probably otherwise wouldn't have. In this case, this is a picture of Jim Cramer's show Mad Money. And I guess there was a caller talking about a popular container ship stock called Zim Integrated. And I've seen a lot of places on the internet recently, they were very upset to find out that Jim Cramer is bearish on this particular company. He thinks that it's a dividend trap. And a lot of people were mad because I think the stock price after his show went down dramatically because of that. But I think a lot of people miss isn't so much that, Jim Cramer is bearish on this particular company. I think what people should really be paying attention to is the fact that Jim Cramer is even talking about this company. Under normal circumstances, he will not be talking about a shipping company. They will not be seeing, CNBC interviews with shipping CEOs. You will not see documentaries on a broken supply chain, right? If the media is drawing attention to your shipping company, along with some other indicators, it's not the end all be all. If this is also present, it's telling you there's a lot of retail interest. There's a lot of paper hands, I guess is the saying. You've already attracted a lot of the public. You've already attracted the maximum amount of people that are going to invest in that company for a particular cycle. Okay, to elaborate a little bit more on that last concept of public attention, I think we have some wonderful tools out there that you can actually use on that internet to measure public attention. This is a screenshot of, by the way, I don't want to, denigrate any Zim investors or shipping or container ship bulls out there. You guys can do whatever you want. I'm just showing you guys what I see. Okay. This is a screenshot from Seeking Alpha, and you can see that there is a lot of articles in a short time frame. Like I mentioned before, shipping's usually boring. So you don't tend to see in these shipping sectors that are really dead, you don't tend to see a lot of articles. Maybe you see an article every couple of months on a company if you're lucky. This screenshot, there is basically an article every day or every couple of days on this particular stock, right? We also have Google Trends. You can search for any particular company. If you see that there is a huge spike in interest, that tells you that, there's a lot of those retailers, I guess, much like myself, who are already in the stock, right? This last picture here is a picture of a conference hall. The reason I posted this is because there's kind of like a saying that goes around in these, these shipping conference places. When the room is full, that is usually telling you that it's time to get out. I'm actually going to post a clip of a oil tanker CEO where he has a short story that kind of talks about this public interest and kind of how it usually is a great measurement of the interest in a space. And usually when the room is full, much like maybe some of these other indicators out there, it's telling you that you might want to start thinking about taking your money somewhere else. But hey, those are just some simple indicators that I'll be using to let me know when it's time to get out. I'd be curious to hear your thoughts. Is there some other indicators that you think that might be useful tools for some other people out there to tell you when it's time to sell? Let me know in the comments below. Have a great day, and I'll see you guys soon.